Okay, I get that, but do you agree, Phil, that at the moment gold is a little pricey, and Ed has made this point before, it has year to date, granted we're only a month and a half into 2020, it has outperformed the S&P by something like 8 percentage points.
It has, and I'll tell you why, Liz, because when gold cycles, gets into a sideways pattern for what was really about a 3 or 6 year period, once it breaks out of that area, there's not a lot of resistance at that point. So when that happens, that's when gold usually has its most dynamic moves. And so you've got all this pent up concern in the marketplace that is adding to gold. Central banks have been big buyers of gold along this range. So even if the coronavirus fears calm down a little bit, it doesn't mean that gold will calm down a little bit. But it's kind of interesting. If you compare gold to the industrial metals today, kind of interesting. Silver sometimes is known as the poor man's gold, right? But now it was acting like it didn't know if it wanted to be. Yeah, it was up, and then actually silver went down a little bit and then back up a little bit. So the poor man's gold is not really performing as well as silver isn't performing as well as gold.
Guys, we're marking it at about 10.5 minutes before the closing bell rings. And again, Mitch Modell of Modell Sporting Goods, he's a businessman. He was on the network earlier. He's just about to leave the floor. Mitch, this is my microphone, so we're going to have to get really close here to talk. But as a businessman, what is going through your mind when you see a stock sell-off like this? Do you worry that your customer is going to be spending less? Tell me the atmosphere and the landscape.
It's about the customers. It's about the 401ks for our associates. It's about the environment. This is like a tragedy, beyond a tragedy, and hopefully
for an employer, because you're looking at fewer customers at the moment.
Fewer customers, also sourcing. How is this going to affect all our sourcing on imports?
China.
It's going to delay a lot of our deliveries. People that reacted before, they'll be fine. People that are scrambling today, we're already hearing 30, 60, 90-day delays on goods.
Well, tell me what you have learned from this as a longtime guy in retail and apparel. Do you change where you source your material?
You got to move out of China, and you got to spread it as much as you possibly can over countries that aren't going to be affected like this. This is unreal.
I only buy my son's Adidas sweatpants from Modell, so thank you. Hey, I could stand here all day. I could stand here all day long. Am I going to Christina? Okay, I'm going to walk up to Christina. Christina, you're getting a sense here that we're heading. Well, I go with what Scott Redler said. We're not gapping down. We're not jumping up at the moment. We're down 941 points. What are traders telling you?
Well, right now we want to focus on some travel stocks now because we have a huge sell-off with MGM. A lot of the resorts, a lot of these resorts in general have exposure to China as a whole. For specifically, we're looking at Wynn. 75% of their revenue came from Macau. So you know that this sector is going to get hit as a whole. You have people not traveling. I know I was in India, I was wearing a mask. Everybody's very paranoid when traveling. So that was within the Asia region. But now the fact that you're considering Europe a major part of it too. We were looking at flight tickets just for fun on kayak, $400 to go to Milan from here. You're going to see travel visas stopping over there. If that continues to spread, the major talk is how can we contain it? And will it get worse?
Right.
And so, which is why this sell-off has hit a lot of these, the travel sector. CDC also, did put a warning on Japan as level 2, as well as South Korea as level 2. So you have all these factors. You've got China, of course, Japan, South Korea, Italy now, and then throw in Iran, but not many of us are traveling there. And that's going to weigh heavily on the sector as a whole, especially the cruises, too.
Indeed. And she's not even sweating. But she's been running around this floor as we are. Okay, folks, we have 8 minutes to go. 8 minutes left before the closing bell rings. Again, no commercials this entire hour because, Sarge, anything starts to happen in the final 5 minutes, you could even say, right?
Oh, sure. I mean, right now, I think when I was on with you earlier, the Dow was down, 7 something?
Correct.
200 something points from now. Now we're almost defending the lows of the session here. And it's going to go on all week. I'm probably going to be on TV with you a lot this week.
Well, that's not a problem. He has so many fans of our viewers. But as a trader, the psychology here is, boy, things look cheaper, so I might want to get in. But there still may be more shaking out to happen.
To be honest with you, Liz, I've gotten myself involved in 3 names today. I probably have pedestrian profits in all 3 right now. I might take that risk off going into the last few minutes, depending on how I feel, depending on how the market feels. I know big names. I gave them to you earlier, Amazon, Apple, Disney. I may or may not want those are intended to be investments.
Right.
But if I have to turn them into trades to make money, that's what I'll do.
Okay, Ed Coyne, I want to point up to gold here, up on this board here. Gold is up $12. It had been up $30. Now it's at $1,660. Why it's such an interesting move on a day where there is so much fear?
Well, I think the biggest mistake investors can make is think about gold as a trade. It truly is an investment. When you think about what it does in a portfolio, more and more investors are thinking about it as a core allocation. So I wouldn't get too caught up with gold going up or going down on any one given day, and really focus on what's gold's purpose for your portfolio. Is it allowing you to stay invested in other stocks and know that you have an asset that's going to move at different times for different reasons? So I wouldn't get too caught up on what gold does today versus tomorrow, and continue to focus on the long-term direction of gold over the last 4 or 5 years, ever since the Fed started tightening back in 2015.
Can we put up the VIX, the volatility index? And I do want to point this out, guys. The VIX is your best indication of fear in the markets. Earlier, I marked the VIX at 2394. It then went up to about 24. That means it was spiking about 40%. The VIX is up 66% year to date. Right now, it is back up 44% just on this session alone. Phil Flynn, tell our viewers why that's significant. That's a big jump there.
I think what it is that, we made a run for $1,700 an ounce. We kind of failed at that area, and they decided to come back down a little bit, mainly because the stock market got a little bit of a bounce, and I think if you look at most of the moves on the commodities, it's been predicated on what the S&P and the Dow have done. When we saw a bounce on those, we immediately saw some of the risk on commodities start to come back off today. Interesting, we talk about, gold and silver a lot, but look at platinum and palladium. Palladium, which had been near a record high, collapsed over $1, which is a huge move for palladium. Platinum as well. Silver, like I said, we've seen some volatile moves on silver where it was higher and where it was lower, and that had a big impact as well. And copper, of course, being back down. And as we get closer to the close, you always kind of look at the order flow coming into the pits, and really we're not seeing a commitment right now, higher or lower. It's very even, half as many buys as sells coming. So they really aren't deciding whether this recovery bounce off the low is good or if it's just temporary.
4 minutes. 4 minutes remaining before the closing bell rings. Folks, we are down 980 points at the moment. I would guess, Sarge, what do you think? Do we go lower here, Sarge, from here? Do we drop even more?
Well,
it's kind of weird behavior. We were down just 990 points. There we are, down 994.
There's a lack of a commitment right now because we don't know how broad this coronavirus is. We don't know how deep it is, where it is exposed. We have no idea what's going on in Iran. We have no idea what's going on in North Korea.
Down 1,000.
All right.
Down 1,000.
And would you be surprised if we closed down 1,200? I wouldn't be surprised.
You would not be surprised.
I probably wouldn't have those pedestrian profits anymore, but I wouldn't be surprised.
It only happened twice before in history where, as far as point losses are concerned, we were lower than that. I do just want to pull up Nike. Nike is a widely held stock, folks. Can we pull that up? It's down about 4%. Specifically, and we knew Nike had exposure to China, but specifically this concern in Italy. And by the way, it is Fashion Week in Milan, and they are trying to deal with all kinds of issues with the thousands and thousands of people who come for Fashion Week in Milan, and big names that, Kering, Gucci's parent. These are all luxury names that are having a very tough time at the moment. Dow has wiped out the gains of 2020. Forget Dow 28,000. Remember, we were at 29,000. We're now at Dow 27,993 and losing steam. Phil Flynn, what would you buy on final 2 minutes of trade here?
Listen, you always hate to catch a falling knife, but I think at this point you could probably buy some cheap calls on the S&P or on some stocks, because we know that. I can't tell you how many times, Liz, we came in on a Monday on fears of either coronavirus fears or China trade war fears, and people came in over the weekend and couldn't wait to get out of the market. But then came Tuesday, and things got put in perspective, and we saw the market come back up. Now, while we can't guarantee that's going to happen, I can tell you this: the market has held some key support. We seem to find some stability, and we're probably one headline away from really taking this market down lower tomorrow or bringing it back up. But, you know, we did get some positive headlines on Corona today from the World Health Organization. They're saying,
I don't believe them.
it's not a pandemic.
I'm sorry,
well,
Phil.
I know. I agree. You don't have to believe them. But if the market believes them, then we could get a rally.
Okay, clearly, folks, the market does not believe it right now. We are down 1,003 points. Sarge, final minute and a half of trade.
You know, let's go back to gold. Okay, because I don't think the small investor knows how to get involved in gold.
Yeah.
What I recommend is a 7.5% portfolio exposure to gold. First 5% physical. You want to have the currency in case all heck breaks loose, right? The other 0 to 5% you can manipulate through paper gold, through the futures, through the options.
Yeah.
That's how you get this done. That's how you expose yourself to gold at any time, even when it's much lower and times aren't, and we're not in crisis. I also think you probably need some Bitcoin going forward, although I have none of that myself. You see it trade in opposite directions with the U.S. dollar at all
with
times.
1 minute left, can we pull up Bitcoin? And I ask that because Bitcoin lately on a day like this has shown some spark and some life. Earlier I looked at it, was up about $70, but Bitcoin has been, in a way, a weird flight to quality. Right now we're down 1,008 points on the Dow Jones Industrials. Do we have a Bitcoin call? Can I at least be told what it is doing?
The DXY is flat, and it will trade inverse with the DXY.
Melanie, Bitcoin, please. Can somebody tell me? 9,587, and I'm guessing that's up.
I think it's down small, if I recall.
Oh, really? Okay. All right.
9,600 on the futures.
Gotcha. And here we go. You guys hear the cheering, and boy, maybe it's because it's a cheer of relief. The Dow Jones Industrials looks to close down 1,023.